Welcome to the Midweek Market Update. So as always, I will be doing a technical analysis and giving you my thoughts on SPY the Qs and IWM. But after that, we're going to go through 5 trade ideas that you can watch into the end of the week. Starting in our S&Ps, we always go through our sectors. Up the most was the energy sector, down the most was the biotech sector. But quickly, do you think that either of those two things, energy being noted by this little sliver down here and biotech not much better right there, do you think those really had the strength to move the market? No, absolutely not. So if you go back over to our SPY, you'll notice it was only up 0.08%. In terms of the heaviest weight, we always talk about financials as well as tech, and those pretty much canceled each other out today. We had up 0.5% in financials and down about 1/3 in technology. So again, canceling each other out, providing a middling effect. And the reason we covered these sectors is to just illustrate that there really isn't any more sector risk out there. We talked about in some past videos the fact that financials really needed to pull their weight for the markets to continue higher. And now, they've done their job, okay? They've done their job, and now everything's about middled out. So no sector risk. One thing I do want to point out is our volatility. If we check in on the VIX, of course, it looks like it's just plummeting back down to our 2050 floor. But again, don't just take that at face value. Let's go back to SPY and actually look at how the range has been acting, right? If we check in, I would say that volatility is still, very well and alive, right? Range here, okay. Range here, okay. Range here. We just saw a huge expansion of range. So don't for a second think that volatility is just, evaporating. Sure, maybe fear is slightly lower because we're moving higher, but volatility is definitely there. So what do we do with that information? Well, I want to go out on a limb and certainly say that this here feels like yet another liquidation break. So let's talk about that. On Friday and in the weekly watch list video, I'm not going to deny the fact that it certainly felt like we did want to move lower, but did we ever violate that low there? No. As a matter of fact, what happened is, once again, we'll call this a liquidation break because we've retraced that move nearly 100% with some short covering, right? A very, very common characteristic of liquidation break is shorts getting too short too fast, and then they have to cover, which causes prices to go higher, right? It's the same story as almost like what we saw in GameStop and all those crazy movers, right? It's the same principle. Shorts need to cover. They turn into buyers and prices move higher. So what do we need to see here, and where's the risk in the marketplace? Well, I would say now that we're pretty much at these highs in here, the shorts are done, right? The shorts are not going to push this market any higher by covering. What we need to see is new money buyers come into this marketplace. So how will we know that they're there and they're there to move this market higher? Well, a few things. First thing is if we pull back and move into this gap and the gap fills, you want to see a gap fill reversal. So anything under the 379.62 fills down to the high of Monday, there at the 377. And remember, a lot of support in there based on our 6-day balance sort of low area over here. So I would say probably a buy here for a gap fill reversal. And once again, that would be one signal that you would know new money buyers are stepping in, right? They're defending this, they're repairing the structure, and most importantly, they're keeping the uptrend intact by forming a new set of higher lows. So that's something to keep in mind. If we move higher above the gap, of course, clearing these two highs would set up the possibility for breaking the all-time high and making a new higher high, keeping the uptrend intact. That is a picture-perfect scenario to the upside. Do I think it's going to happen on Thursday and Friday? No, not necessarily. I don't think that in 2 days, all of those things are going to play out, but it's some thoughts for you on how to approach what's going on in the marketplace, okay? To the downside, if the gap fills and continues lower, we have support trend line as well as 50 SMA, which will continue to creep up and has been historically defended here, okay? That's the first way we'll know if new money buyers are coming into the market. The second way we'll know is through our internal screen, okay? On Monday, how did we know that it was short covering? Well, we couldn't know for sure, but in hindsight helps a little bit. When you see the volume here go sideways in the morning, it means that no one's committing in one direction or another. But as it starts to pick up here after that morning session, that's when those shorts are exiting those positions, okay? So keep that in mind and remember that. That might be something to write down, right? As we go sideways in the morning and then pick up in the afternoon, that's the shorts panicking out of the position because there was no follow through early on in the day. Now, if we see a new money buyer situation show up, what do you want to see? What you want to see, of course, is slow and methodical grind to the upside, probably clocking in around that 300 million, 350-ish million, 400 million reading here on the volume. Our breaths up top should be, again, controlled and positive. You don't want to see emotional buying, things of, readings 5-to-1 positive. That's probably too much, right? This right here, what we saw at the close of day on Wednesday, is a good read for sustainable trending buying, somewhere around 2.5 to 3 to the upside. They, of course, want to be in sync as well, our New York Stock Exchange and NASDAQ. And real quick, I will say, if you don't understand what I'm talking about, I will link in the cards up above a video where I cover all of the internals. So go check that out if you want to learn more. In terms of our advanced decline line, what will you see if new money buyers show up? Well, of course, once again, we will be in the positive section for one, but what it will look like is probably opening somewhere around 400 and trending higher. You're not going to see this pullback in the morning and then higher. You're just going to see higher right out of the gates as the majority of stocks are being bought and held above the prior day's close. Now, if we open up in the trend zone somewhere up here, that's a good thing, but it probably means we're opening on a gap up, which means structure below us is getting weaker, okay? In terms of tick, what will you see there? Again, let's talk about the short covering first and that phenomenon. Of course, here in the tick, we opened very, very high, right? And as we pull back, and we start to see, again, those extreme reads as the sellers could not get any sort of grip on the marketplace and send it lower, as noted by no ticks down here in the extreme downside, and then we rebound, extreme tick to the upside. That's your signal there that people are getting emotional and panicking out of those shorts, aka market ordering as buyers, right? So that's your signal to know if we have short covering. How we'll know if we have the new money buyers step up is if we have very controlled ticks in the positive section. Something like this, maybe an occasional mark up here in the plus 1,000 area, but you're not going to see, very emotional buying and consistent reads up here over 800. You'll, of course, won't want to see it go down lower if we see the new money buyers show up. So hopefully that was sort of helpful in determining how we know if we are going to see those people show up or not. Again, always think of the market, and this is very critical, as new business and old business. This most recent rally up in the S&Ps, this is just old business. This is the shorts closing their position, so that's old business. To continue higher here, we need to see new business come into the marketplace, and again, all of the things we just talked about could potentially point to those things happening. Let's take a brief tour through our market profile now. One thing I just want to point out is, again, where value is developing. If we expand this a little bit, you'll notice that value is certainly overlapping in today and yesterday's session. So that is a good thing for, again, holding up value and encouraging the buying action. Higher prices attract buyers and lower prices actually attract sellers. Regardless of what you may think, that's how it works, okay? So one other thing I want to talk about here on profile is this P-shaped distribution. That is classic, once again, short covering. How do we know that? We gap up and there is no reaction to the downside. There is no value built lower as people slam the button, get me out of this short. I do not want to feel the pain anymore. We move higher and then consolidate at those highs all day because, once again, those are old sellers. That's old business being transacted, and the new business is actually buying these levels up here, providing value higher, okay? So these are all clues that we want to keep in mind. That's pretty much all we can discern from the profile at the moment. Again, keep in mind the gap below us. We had a poor high on Tuesday that has been repaired with some meaningful excess above, so everything looks good there. And again, that's kind of it for the profile now. Let's go back over to our charts here. We'll cruise through the Qs. In the Qs, again, we defended the support trend line as it loads there, and we nearly opened at all-time highs. So is that in any stretch of the imagination bearish? Probably not. Again, gap to fill below us, and if that gap fills and then the gap fill reverses, that's probably another sign that we have some strength here in the Qs. That's going to be around our 320, 350 mark. Again, obviously a little bit more room to fall until we come back into the trend line, but based on everything that we've talked about with the psychology of a liquidation break, is that likely in the last 2 trading days of the week? I would say at this point, probably not, but it's not completely off the table, right? Blue sky territory is above whole and half dollars, intraday levels that do form. In terms of our IWM, what's going on here? Again, pulled back into the support trend line. We talked about the fact that if it does move back higher, we're looking at chop in between this range, and the true break is going to be over 215 the whole dollar. Looks like it could be in store with two back-to-back hammers, indicating that buyers are stepping up. There is no longer any poor structure in this chart. We filled both gaps. Both this one here, and then there was, actually, I guess there wasn't a tiny one there, but there is no poor structure immediately here in the vicinity. Again, looks good holding on to that support trend line. I would say still very bullish here in the IWM. Let's go over those 5 trade ideas now. We're going to start off here on FSLR. So for First Solar, and the idea here is that we're seeing some hammer candles form right at our 50 SMA and at a critical area of support. Now, because we're coming off of a higher high here, I think the odds of respecting this trend line, right, if we draw this one in, something that looks like this from here, if I could get a click, there we go. I would say that coming into the trend line off of a higher high leads to the higher probability that we see a bounce and trend continuation as opposed to trend reversal. Okay, that paired with a bouncing market looks like a good setup over today's high for me. The next one that we'll look at is going to be on Now, for Service Now. And the setup here is simply a short resting bar after an extreme expansion of range. We're in blue sky territories, and the fact that we only pulled back to, just about halfway of that large expansion bar looks good to me. If we can take out these 2 highs in here and continue into blue sky territories, just looking for trend continuation there as well. The next one is going to be on PLAY, for Dave and Buster's. And the play here, no pun intended, is going to be a move again into blue sky territories. If we can take a stab over, if we, depending on what happens in the pre-market, if we either move over yesterday's high, meaning today, Wednesday's high, or pre-market high, first look for a small bump in the road at 37.50 and then boom, off to the races after that. Next one, in my opinion, is going to be on Shake Shack, so SHAK, and what we're looking at here is actually a flush point, okay? And the reason this is different than what we saw on our first example, which was the trendline touch, is because of this, right? Look at all these touches and how tight they are in terms of grouping, right? 1, 2, 3, 4, 5, 6, 7, 8 touches now, all to the same area, around 107 the whole dollar, and we have lower highs coming into it. I would say, again, because we're not at a support trend line, as a matter of fact, the support trend line is really somewhere in here. There's some room to fall here on Shack. So looking to see if that 107 breaks early on in the day there for some puts. And the last one I'll leave you with is on Shopify here, SHOP, and this is, again, a bullish setup. If we check in on our pressure cooker top area, it's going to be right around here, around 1235. If we can accept over either today, Wednesday's high, and the prior high there, I would venture to say we probably make a run to the all-time high here at 1285, okay? So bullish setup on the last one we looked at on Shake Shack was the only bearish one, and the rest are bullish as well. So I hope you follow along, see if they work out. You have the trigger points in mind now, and with that, I'm going to wrap the video up. I wish you all a green rest of the trading week, and I hope to see you in the weekly watch list on Sunday.